All right, everybody. Stocks by the numbers. Welcome back. And I wanted to do an update as per request on Supermicro Computer Incorporated, ticker symbol SMCI, listed here on the NASDAQ. Stock closed 47.58, down a little over a point, 2.4% on the day, up a handful of cents after hours. Let's find out what's going on. First of all, to bring you up to speed, you are dealing with an absolute freaking beast in the tech space. This company has seen revenue increase over 100% year over year and expecting essentially the same growth now moving forward into next year for 2025. So very quickly, let's look at the numbers here. And this is a company that we looked at. Again, I know the numbers have changed because, as you see, we had the split right here at the beginning of October a couple weeks ago, 10 for 1. So basically what you have to do is just add a zero behind all of these values, and that's where the stock was originally, right? And I know that I have a bunch of different trend lines drawn out now, and that's because they don't adjust, apparently, when a company goes through a stock split. So when I pulled up SMCI, all of these old like support and resistance trend lines were like up here, nowhere near the candles, because they were, valued at, $600, $800 a share instead of 60 and 80. So I just had to redraw a lot of trend lines. So if there's something that I left out from a previous video, please, don't hold it against me. But we had the gap up here. The company came out. They were talking about massive surging demand that they were seeing due to AI. They were pumping up guidance moving forward. They were coming in well above analyst expectations. They were forecasting, again, like 14, 15 billion for the year. As you see, they closed out 2024 for their business. They closed it out at a touch below 15 billion, bringing in over 1.2 billion in profit, net margin percentage of a touch over 8%. And now they're expecting almost a double of that for this now next year coming up for 2025. So this growth, this is what I was talking about. The growth really cannot be denied. The company slowly growing out of the years. Just look at this, 3.3, 3.5 billion, 5.2, 7.1, almost 15. So the revenue, I mean, it's been growing like a weed. And of course, the profit margins are following suit, which technically is a very good sign. But the fact that this company exploded in value, was flying underneath the radar, then all of a sudden, all the traders started to trade it, and they jumped on the train, to catch that breakout. Then people were speculating, oh, this thing might get listed on the S&P 500, and then it gets listed on the S&P 500. Stock absolutely explodes. Again, we hit a high of 122.90, but again, you add the zero, and it hit a high of $1,229. Then we started to pull all the way back to about the 500 mark. Then we had the news of Hindenburg. Apparently Hindenburg feels they are like our market savior or something like that, right? All of a sudden, this company is raging. They have a massive surge in demand because of AI. They're benefiting hand over fist. The shareholders are finally seeing that big growth because, again, if I back up, I told you, I told you that back here, this is when I was a broker and I was watching SMCI, and I remember pulling it up and seeing the steady growth in revenue that they were showing over the years. And I remember saying, wow, look at this. This is like years that the stock was in this downtrend consolidating. Why isn't the stock going up? And then all of a sudden, it's freaking the hottest thing on the street, and the stock absolutely exploded. So this is why, again, this is a prime example of what I say when we look at kind of the newer up-and-coming companies that are starting to show healthy growth in numbers. Companies like SoundHound kind of showing that consistent little revenue growth, quarter over quarter, year over year. Companies like Hims and Hers, Honest that we just looked at, right? That's why I did the update. These three stocks looked good in the numbers. They went quiet, and now they're raging. Now they're all trending. That's the point I always try to drive home to my audience. When you find something good in the numbers, this shouldn't bother you. You should be waking up every day saying, thank you, I'll buy more. Thank you, I'll buy more. Thank you, I'll buy more. Then you turn around and say, Thank you, I just made 300,000 profit. Thank you, I'm now a millionaire. I can retire early or something, right? That's why I say work smarter, not harder. Follow the money, follow the revenue, follow the numbers. But I digress. Basically, what's going on is Hindenburg feels they're the saving grace of everyone out there. Hindenburg comes out, they say, SMCI had an issue in the past, so we're basically assuming they have the same issue right now. So we shorted the stock, and here's the report, so everyone should short the stock. Kind of came out of left field, in my opinion, but whatever. Then we also had news. What was the other one? Roblox, I believe. All of a sudden, they come out basically saying the same crap. Oh, we think they're fudging the numbers. The active users are lower than what they're saying. Roblox, yeah, that's BS. We're shorting that one too. So all of a sudden, Hindenburg has kind of like labeled themselves as this white knight of the market, and they're, like the Robin Hood going out trying to fix all wrongdoings and whatnot. It's funny, they didn't file a report saying Nancy Pelosi is outperforming Warren Buffett, and that's pure bullshit. Someone has to investigate that, right? They didn't file a report saying that. I mentioned that last time in the SMCI update video. Nancy Pelosi's outperforming Warren Buffett, the guy with 85 years of market experience, but the DOJ doesn't investigate that. But instead, off of some bullshit Hindenburg short seller report, they immediately launch an investigation into SMCI. So I'm going to tell you something right now, just like I said last time. They better hope that they're right and something happened and they bring the stock a little bit lower to justify this random short seller report and this random launching of the DOJ investigation. Otherwise, the stock is going back up to where it was, if not higher, in my opinion, almost instant-frickin-taneously. So that's why right now, in my eyes, again, I'm an American. And in America, you're innocent until proven guilty. At least it used to be that way. So until I find out that, yes, some numbers were BS, then in my opinion, you're essentially buying like $130, $150 stock for sub 50 right now. That's the way I'm looking at it. Until I have proof and evidence of finding them guilty of wrongdoing. And also, I will say this. If there is wrongdoing, we don't know yet the magnitude of the discrepancy. Right? So, we may find out, there was like an extra 15, 20 million in the books that they didn't report, or they didn't pay taxes on, or something like that, right? So we know, obviously, technically, that's a negative. So the stock's probably going to go down if we get news like that, right? But again, it's the magnitude of the discrepancy. Because something like that, yes, it does look bad, but you and I both know it could probably be cleared up pretty quickly. Right? On the flip side, if we find out something drastically different, like this last quarter, they reported 5.308 billion. They missed the estimate by, 9 million and change. Less than 0.2%, slight miss. But let's say we find out that they really did 3.3 billion in revenue. And they just reported 5.3, right? You understand what I'm saying? So if it's really some nonsense like that, then yes, I agree with all of these people. This is some shady crap going on. The stock may take like a 50% hit or something if something like that comes out. So we don't know yet the magnitude of the discrepancy. But I think the report was saying they were like, BS in their client list and whatnot. I don't even remember exactly what they said because honestly, again, I mentioned in the last update video, this short seller report came out of left frickin' field, and this company was the hottest thing since sliced bread, and it gets listed on the S&P, and everyone's glad they bought it. Everyone's looking forward. A year or two down the road, they're seeing the increase in demand, the buffed up guidance. And they're saying, wow, I'm glad I own this. This is such a great stock. And then all of a sudden, it sells off a little bit after the news. And now all of a sudden, short seller report, it's a piece of crap. They're cooking the books. I don't know. In my opinion, it's just not sitting right with me. It's not sitting well with me at all. And I just have to laugh that, again, all of a sudden Hindenburg is like the Robin Hood of the markets. And they randomly decide, oh, SMCI, they got some fake numbers. Oh, Roblox, they got some fake numbers as well. All of a sudden, everyone's fake, right? All of a sudden, everyone's fake. How come they don't come out and use simple logic and common sense like I did when we look at something like an NVIDIA? Right? The company brought in whatever, 30, 40, 50 billion for the year. The market cap's like 2.7 trillion. How come they're not investigating that one? We were talking about the low ball estimates when it came to NVIDIA earnings, right? Somehow, even though they knew that demand was chunking up for the AI chips, and even though analysts knew because the company told them that guidance next quarter was going to be beefed up, 20% above previous estimates, but yet somehow when NVIDIA would report earnings, they would always consistently come in 16, 19, 24% above analyst expectations and do it consistently. How come there was no investigation there? Notice how they beefed up SMCI revenue estimates so much that the company ended up missing by 9 million and change. How come we didn't see that with NVIDIA? They were telling you that demand is going through the roof. We can't make the chips fast enough. They're ordering them before we can make them and ship it to them. Okay, so how come your estimates didn't chunk up 30, 40% to see exactly what the quote-unquote ceiling would be for NVIDIA revenue? Right? So that's what I mean. Something like that, oh, it's no big deal. It gets pushed to the side. That's not a big deal. SMCI, one of the smaller players, now running up in value, becoming a name in the space, because it used to just be like NVIDIA and AMD. And now people are talking about Dell, and now people are talking about SMCI. Sorry about that. But you understand what I'm saying? All of a sudden, now it's in the spotlight, now it's on the S&P, but now all of a sudden, oh yeah, the books are cooked. There's some shady crap going on. Why didn't you say that a year ago? I mean, to get to this point, they would have had to cook the books. Right? You understand what I'm saying? So where was Hindenburg 12 months ago, 18 months ago? Why wasn't, when the news came out that they got listed on the S&P, why didn't they launch their short seller report right then and there? And say, wait a minute, we think that the company's doing something a little shady. They shouldn't be listed on the S&P. We should investigate. We should find out if these numbers are accurate. Why wasn't that done here? Because in my opinion, not to go down the rabbit hole, but in my opinion, it's done on purpose. And I don't care. I'll swim against the stream. I'll be the one guy to say it. I don't care. I think it was done on purpose because this rage in value, we looked at the numbers, and in my opinion, this whole surge up to over 1,200 a share was 100% justified based off the growth of the numbers and demand that this company is seeing. But now we got to beat it up. We got to bring it down 60, 70% from those highs so that maybe someone else can start buying it. And then we may hear that this report was wrong. Everything's fine at SMCI. Boom, the stock's back up. We're back to normal. But the fear from the short seller report worked like a charm because it drastically brought the stock down so others can accumulate and build a position and now catch that 200-300% rebound wave. In my opinion, I am 99% convinced that's what's really going on. Now, I know, granted, last time I did an update, there were people in the comments saying, yeah, I don't know, it's on file that they did something like this a couple of years ago, so I don't know, they might be doing it again, right? Some people can understand that this may be possible, and you have a lot of people who said, hey, listen, I like the company, but why don't we just wait and see, what this investigation finds, and then if there is no wrongdoing, I'll jump in because it does look good. If there is wrongdoing, then, I'm going to be glad I didn't buy it, and I'll let it, drop down, and I'll let Wall Street beat it up, and then I'll buy it, maybe at 37 or 27 instead of 47. Okay, that's understandable. But again, of all the companies out there, the fact that they randomly just came out with SMCI, and again, they basically said, oh, they did this back in 2017, and they're probably doing it again. I am not BSing you. That is essentially the gist of that short seller report. And of course, we're innocent until we're proven guilty. So until we're proven guilty, this is a $130 stock, in my opinion. And you guys know I'm being conservative. Again, I said initially, I think that this is a $2,000, $2,200, $2,400 a share stock, which after stock split would translate to $200, $220, $240 a share, which of course would indicate, several hundred percentage moves from several hundred percentage point moves from this level. But 28 billion, less than $28 billion market cap with a 24 PE, with markets consistently hitting highs, in my opinion, for no reason, and tech leading the way and leading the charge. So again, looking at the valuations of companies like Dell, Nvidia, AMD, the fact that this company is trading less than 2 times last year's revenue, 15 billion, market cap 27.8 billion. So they're trading less than 2 times annual revenue with a 24 PE in the hottest sector in the market, with markets approaching highs and consistently hitting new highs. Just think about that. And let's look at what is potentially coming down the road. $6.5 billion, less a touch below $6.5 billion. The company said this quarter they were looking for $6 to $7 billion, and estimates you can see $6.46 billion. So if the company obviously reports anything above $6.5 billion, that would be a huge win. And even moving forward, you can see almost $7 billion, almost $7 billion, over $7.5 billion to close out 2025 for them. Annual expectations. Look at this. For this current year now for the business, almost $28 billion. So they're essentially going to bring in their current freaking market cap in revenue next year. But you're telling me the stock is down. We went from 7 to 15 to potentially 28 just over the last 3 years. And now you want to launch an investigation. You want to keep the stock down. I really just have to laugh, and honestly, personally, I am looking at it as I think they did someone a favor. That's what I think. And again, people want to come at me in the comment section, whatever. I got to deal with some nonsense, some BS. I don't care. I really don't care. I am very convinced that that is what's going on. Because we'll look at the numbers again real quick. But yeah, debt jumped up. I mean, it's only $2.1 billion. Which is really nothing. The company's holding almost 75% of that, they're holding in cash. So debt minus cash is about negative $500 million. Assets outweighing liabilities in the short term, slightly being outweighed in the long term. If we switch over to the balance sheet, we can see the equity has essentially tripled over the last year and a half. Going from 177 billion, now we're up to almost 5.5 billion of total equity. So now if we take away that debt minus cash, $500 million, from the equity, we're at positive 5 billion. Then we have to come down and look at the business. The company did 15 billion in revenue, which brings us to 20 billion, and they brought in 1.2 billion in profit, which in my opinion puts quote unquote fair value of the business at 21.2 billion. Current valuation 27.8 billion. It's a joke. It's a joke. And that's why I'm saying, after all the headache and the massive sell-off that they caused for this stock to go through, they better be right. Otherwise, it is going to immediately freaking explode back up in value. I'm telling you that much right now. Book value per share climbing up, 200% in change. Was the low threes. Now it's up to around $9 a share. Trading about 5x book. Which again, for a tech company and the space it's in, connected to AI demand and the massive surge in revenue that they saw, 5x book is pretty cheap. 5.6. Even the enterprise value is higher than the current market cap. And of course, before this random report hit and the stock started to take a hit, you can see other businesses were valuing this company at $50-60 billion, which again is over 100% higher than the current valuation of the company. I don't know. I really just have to laugh about it. I really do have to laugh. And that's basically the gist of the story behind what's going on here. So, I get very passionate about this one because I liked it many years ago. I was watching it personally for a while, and I know that was, over a decade ago. It was before I started the channel. So, you can take it however you want, but I just remember seeing like the growth in the numbers and then seeing like the stock going quiet. And I said to myself, this one looks like it's growing nicely. This stock should really rally and explode over the years. This should be a good one. And then when no one's looking, no one's paying attention, it starts rallying, coming out of the lockdowns. Then all of a sudden it starts trending. People jump on board. They look at the surge in numbers. And then, of course, the company keeps mentioning the growing AI demand surge. And then, boom, we're off to the races. They upped the guidance, like 30% or something, remember? They upped the guidance like 30-40% above previous expectations. Ridiculous. Then they get listed on the S&P. Ridiculous. And now all of a sudden, it's a piece of crap and we got to investigate them. So I guess we'll have to wait and see what happens. But as I said, I mean, even if we find out that something was going on and we tanked the stock down, I mean, technically looking at the business, in my opinion, I do like it. And that's why I said initially, it kind of depends on the magnitude of any potential mistake or wrongdoing that this company may have done. So it's kind of hard in my eyes to kind of predict what's going to happen. But right now in the technicals, I mean, we did kind of, we did kind of gap fill. What is this right here? A low of 51.35. Yeah, we didn't quite hit that. We hit 50.60. So we can potentially keep going up a couple of bucks from here. But even now, like we said, if we liked it back here, we should love it down here. But I understand that, again, that some people are waiting to hear the result of the investigation. I understand that. But even from the time we looked at it, I mean, the stock was like 40, 41. Now it's back up to 47, 48 already, right? So you're up a clean 15, 20% just in the last couple of weeks from the last time we looked at it. It does maybe look like we're wedging after this gap down. So, maybe you can see slight 51, and then they might break it back down to this trend line here. Maybe sub 40. But we do have earnings coming out in about, like a week and a half, 2 weeks. And I'd give the company the benefit of the doubt right now. I mean, they have been beating more times than not. The revenue really is surging. The demand is getting pumped up. People are tapping them. I still like it. I really do. I still like it. And if everyone wants to bet against the company because of the short seller report, and I'm the only one left on the bullish side of the fence, then so be it, man. It is what it is. Again, SoFi, perfect example. We were watching it in the low sixes, hit new lows. People saying, I think it's done. We might see 5, we might see 4. Now stock's back up at 10, right? So that's what I mean, Sometimes, as Buffett says, sometimes you have to be greedy when others are fearful, and be fearful when others are greedy. And that's why looking at certain stocks like Nvidia or McDonald's, in my eyes, way too overinflated, I would be fearful as everyone else is being greedy with those positions. Something like SMCI, I would personally be greedy as everyone else is being fearful. But again, that is not financial advice. This is just my opinion. Whatever you do with this information is entirely your own prerogative. Stock technically dropped below the 50-day moving average here on the daily. So we may come down and retest this mid-Bollinger Band now at just about $45 and then maybe bounce from there. In my opinion, if earnings beat, it should go back up to this 200-day moving average, which it was just at, as you see, where it gapped down. So that should really be retraced almost immediately. RSI basically middle of the road, sitting here about 52.5. MACD dropped obviously on the gap down and now has slowly been kind of inching up for about the last 6 or 7 weeks. Let's see how it looks on the weekly. On the weekly, we have more room to go, and we can see we have a mid-Bollinger Band at about 62.5, and we have our 50-day at 63.85, which is why I'm saying, again, we can gain this momentum and maybe get back above 50s going into these earnings. And then if they do happen to beat, getting back to these levels of the lower 60s or even that 200-day moving average of 71, whatever it was, in my opinion, definitely doable. And at the current valuation, even if they happen to slightly miss the earnings, I really don't see how you can beat it up too much. That's why if you want to keep it in this channel, yeah, you can break it down here to high 38s, low 39s, and then it should really technically bounce and just kind of stay in that channel. But again, we have to take it one day at a time, so we have to check the numbers when they do come out. But RSI still low on the weekly. We have that ability to now rally over the next several days and the next 1 to 2 weeks going into those earnings. So let's see what happens. You can see the MACD really crossed to the downside and fell off a cliff for most of the year after we got the news of the S&P listing. And now you can see that we potentially bottomed out and now have begun the curl to head back to the upside. And this is the weekly time frame, so we may not see a pump and a cross until earnings. So we may slowly inch up and get close to crossing, and then if they happen to come out with a good report, or even if they're just in line with estimates, but they beef up next quarter's guidance, then boom, you may see a big pop in the stock after hours, which may cause the MACD to cross bullish upside on the weekly, and that may add to the momentum, which is why I'm saying if the numbers aren't disgusting, then chances are you're probably going to see 60s and 70s over the next couple of weeks, in my opinion. But over time here, you can see over the years that this is why I love stocks like this. Just look at that, quiet, steady, stable growth over these years. And then, of course, this is kind of when the word got out. And then, everyone who has a trading course Discord told everyone, buy SMCI calls. And all of a sudden now all the traders are playing it, which is fine. It's whatever. But again, years and years and years ago, this was one that I was watching. And that's why, right as it started to move, that's when I mentioned it in that video. I think we were talking about charge point or something. And I pulled up SMCI and I said, you see how the numbers are growing over the years? You see how it's steadily growing? You see how if we look at the revenue and the market cap, you can make the argument that it's still undervalued. I said, in my opinion, these are the types of stocks that you all should be looking for. And then just within a couple of weeks, the word was out, the stock went up, they increased guidance, and then again, people kept buying. They were speculating S&P listing, and then boom, it happened, and the stock exploded. So, something like this, this is what you want to see. And going back to mid-2021, you can see this 50-day moving average. Again, this is split adjusted, but this 50-day moving average off the screen, and now it's up to almost $64. September of 22, 200-day off the screen. Now it's above 22.5. So now these, again, are potential support and resistance levels for the stock to hit moving forward. But, I know I do a lot of talking and I get passionate and I go off on these tangents. But at the end of the day, right now in this current state, I personally feel the company is innocent until proven guilty. And I feel this is going to go back to $130, hit new highs, and probably go to $200+ a share over the longer term. If you agree, disagree, that's fine. Let us know down in the comments section. But again, until they are found guilty, I stand by my personal analysis, and I have a $200 plus long-term price target on SMCI. And we can probably come back to it in about a week and a half, 2 weeks, and we can check those numbers, and we can see how the stock reacted, and recheck some of these trend lines and see where we might go, run into some resistance. And you can see this trend line right here is about 61, right? We had some other levels at about 62 and change, so we can pop right around here, maybe bounce around this trend line, but depending on what we report, we can possibly pop up to the top of this trumpet that we've been in, which would be looking like about 78 and a third, which of course from here would be a massive return. So only time will tell, but we'll do an update again with earnings. But that's pretty much it, so I'll end it there. Once again, Stocks by the Numbers, I want to thank you for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually pretty quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that I understand that markets are rocky, they're volatile, and they're very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time, and have a good day.